Hello, everybody. This is Joseph Gissy, CEO of Tactive, and I am joined by Rob Isbitz, CEO, founder, market extraordinaire of Sungarden Investment Publishing. Rob, what is going on in the markets in your opinion here, in your
Joe,
view?
Joe, I hope you're not trying to marry me off there, with that introduction because I've been happily married for 30 years as of 3 weeks from now to the lovely Dana. Um,
Congrats, by the way.
yeah, thank you. Let's try to keep it simple, okay? This is very likely. You never know for sure, but this is very likely a big picture bear market for stocks and bonds. It doesn't really matter the label so much. It's much more about the idea that, and if you look at my LinkedIn profile, at the top of it, it has a picture of Lucy holding the football for Charlie Brown, and he runs up to kick the football. She pulls the football away. Okay. And then he falls flat on his arse. So that to me is the biggest risk to all investors, advisors, active advisors today, that this is just a slippery slope on the way down. So we have been positioning really since late last year for the likelihood that that would happen. At the same time, when you get a bear market rally, which is probably what it is, like we have now, it is tempting to say, okay, maybe my whole thesis was wrong, okay, and that's all right. Because as long as you've done what we've done so far this year and kept your balances close to zero, okay, no matter what happened, you're in the catbird seat. Great. I hope the market goes up 30% the rest of the year. I sometimes get classified as, too bearish too much of the time, but not the case at all. I'm just playing the cards that were dealt. And as a result, last week, our core portfolio got creeped up to maybe about 2% negative for the year. The max was about 4.5%, so we were never really freaking anybody out. And our growth portfolio, which was a little bit newer on the scene, I've run it for 10 years. We added it more recently to the Tactive platform. We went pause for the year last week. We went positive.
Fantastic.
And that's because we're willing to take a little more risk there. You combine the two of them together, you kind of get the best of both worlds. So that's where we are. And I think more recently, because we haven't had a lot of changes to the models recently, people ask me all the time, what's your trading turnover? And the turnover is as little as possible to get the job done. And right now, I think we're getting the job done. There have been reasons to change it over too much. But the bottom line in terms of the markets, let's just use the calendar. First 6 months were a blank show, okay, any way you look at it. July was a strong rally, great. August is a continuation of that. We'll see if it peters out at some point, but volume has been declining on the rally successively, so that's not a great sign. And then, look, things could be nice through mid-September, but watch out for autumn because we all know the market gets it in its head, and there's a lot of corroborating evidence now that says that if we're going to get a 2008 style reboot and fall through the old lows and down into the 2000s area that I think is very possible in the next year. It's going to probably, the seeds of that will be sown in September and October.
Yeah. So
Shift.
Rob,
Yeah.
from your view, are you bullish, bearish, or neutral for this week?
Well, this week is a short time frame. I would say I'm neutral, but looking very closely at a trend line resistance coming up for the S&P and the Nasdaq. The Nasdaq's been the key to this summer, and so let's call it neutral, very short term. Continue to be bearish once we turn the calendar past Labor Day. That's the way it looks right now.
Well, perfect. Rob, thank you for this week. Appreciate your time.
Thank you,
And
Joe.
sorry about the technical difficulties. I'm sure we'll be able to fix it some way or somehow. But if not, people will get a good laugh.
You know what the irony is, okay? This is literally the first one of these in, I don't know, 6, 7 weeks that I've done from my actual home office because I was on the road and working from different places.
Yeah.
And the one time I get here and I finally get my connection good, I'm not doing it from a car or street or something.
My connection's bad.
The
I
host,
blame Rick because he usually does these. So he probably has better internet than I do for some reason.
there you go. There you go. Well, good to be with you anyway, Joe. All right.
All right.
Thanks.
Thanks, Rob.